Good afternoon. Ira Epstein of Linn Associates with your agriculture wrap-up. And this wrap-up is for Wednesday, the 4th of March, 2020, just after 4:30 p.m. Central Time. Well, we have a sort of mixed day. If you take a look in the grain markets, the corn up 3 3/4, the wheat down 9, the beans up, and not a powerful up 3 3/4 cents there. It was mixed as can be. We're hearing from our Secretary of Agriculture that the USDA is expecting that China will be back in the market buying U.S. soybeans sometime late spring to early summer. So we're getting ideas there. I believe them this time, and the reason is I keep watching for telltale signs. Is China getting somewhat back to normal? And if you're looking at pollution maps, they're coming alive again, which means the factories have turned on. Now, I cannot tell you how many workers are in each factory, but if the pollution's building, they're not burning the electricity for totally nothing. And I'm hearing from the U.S., if you're watching financial TV during the day, that the supply chain companies there are coming back online. That is good news. The problem is the COVID-19 is passing into other countries. My understanding is that Italy's suspending school for 2 weeks now. We know Japan has their students out for the whole month of March. More cases are showing up in the U.S. There are contingency plans running around now from all the regulators dealing in the finance, the NFA that regulates us, what happens on trading floors, if that spreads there. So you're hearing the noise, and it's good noise. Preparation. We saw United Airlines today starting to cancel more flights. So this is all going through, as I said. So what do you do with the agriculture? Well, I make you a promise. The farmers are going out into the field soon. This is March. There's field prep work in different parts of the country about to go on. Planning intentions are going on. This market's going to pick up its momentum. And as you look at what's going on with the so far close this week, we are up 15 cents. The market acts like it might be headed to the resistance in the 905 area on a weekly chart of closes. What's the bias to the downside since the numbers are under that? And that's a number it might want to reach up to. It's about 7 cents away. When we look at the current pattern, we've come back up to this rally high zone that we had before. I told you what I had seen was a market that had rallied, peaked out, dropped down to a new trade low. Let's call it the 878 to the 910 area. Today you hit 911, you finish 904. So I'm fairly confident that you're trading in that zone right now, and the question is, how do you come out of it? When I look at the market in terms of a swing line, this is a chart without a swing line. We can see that we've got something of trading lows here and something where the market's poking through. But when you put the swing line on, it measures it for you. So you have a low here, 878 1/4, that was lower than the 879 there. I know that from memory already. And a higher high. A lower low and a higher high is not a trend. But it is also a rejection of a downside. Now the market is fighting to stay over the 18-day average, which means it has upside bias at this time. And on pullbacks, I'd be looking to see how support shows up at 898.5. The resistance is right here. Look at the Bollinger Band. This is the market coming up to it. The Bollinger Band last night was 910. Today's Bollinger Band, 911 1/4. Today's high, 911. You sold off against it. So the first challenge of that zone is normally where you see the pros moving out. Could you go up and hit that number tomorrow? Right on the button. Why not? Or a little higher. But between there and the 18-day average is where I see the support. Momentum-wise, we're overbought already. It's not a surprise. You get these narrow bands, and what happens is the market's left this thrust to the downside that you had, and now it's condensing price, pushing it all together, and it's like a pipe. You're pushing in through there, and the question is which way if it breaks out. If it fails, I look for support between the 18 and the lower band. If it gets over this, well, the next high is in the 932 area. So I have a game plan set. The other thing I watch, this is the meal market. Meal market yesterday was up and over the upper Bollinger Band. The day before, the market finished 308, right over the band. That's 2 days in a row. Here, the market finished 305.60, so that was against the band, probably just over it by a fraction, but you had 4 days in a row when you were fighting at the 100-day average in that, and all that's happened is the market got through it. I wouldn't be surprised if you pull back in that range. You are overbought. You haven't embedded. You could. It's certainly a rejection, and we saw this again, this sideways action like you had in beans starting to develop. Beans have stayed in that action longer than the meal, and the meal just thrust itself straight on up. The market that's probably going to play a little catch up with that is soy oil. When you lose an embedded slow stochastic, to me, the market owes getting back to the closest moving average, the 100 or the 18-day average, in this case, the 18. So I am looking for those two numbers to make a run at each other now. The trend is down. It is not up, but it is an oversold trend, and the momentum on the downside has been lost. Lost meaning it's no longer embedded. It's got to work out of being oversold, and that means both these numbers likely have to get back over 30. I think that accomplishes itself with the moving average falling a little, prices coming up. The corn market. Yesterday I said you'd rejected the downtrend. It ended as far as I was concerned. You had gotten down under the Bollinger Band. You rarely stay there, turned. And here too, if you look at your momentum, you lost it. So often the 18-day average comes into play, and I wouldn't be surprised if we just hang around there. I think the upside's pretty limited. I think that 100-day average and that upper Bollinger Band are problematic for this market because it would have come pretty sharply about, just shy of about 30 cents to get there, and that's a pretty strong set of numbers together. In the wheat market, wheat, which was the leader while everything else is dropping, is now sort of flipped roles. It's been coming down. It is oversold. I don't know if it'll reach for this lower band again or not, but you are on the verge of getting a bearish crossover where the 18-day average gets under the 100. That is not a good sign for the wheat market. Actually, that'd be quite a bearish sign. And if you developed, and the word is with an ED, developed, you haven't done it. If you got an embedded reading, it would be even more bearish. We'll see what it does over the next day, but the bears have control of that market, but it's oversold. I'd be very careful on sugar to the downside right here. You're at the 100-day average, the lower Bollinger Band in oversold territory. I didn't say it can't go lower. The odds don't favor it. I think the pros are taking money off the table here. I don't see them getting long, but I certainly have reason as a technician to be pulling in shorts. And finally, coffee giving up a little bit. It's been a pretty good run to the upside for this market. It really began back here, consolidated, had another pop. So now the question is, it's overbought. Do we get to an embedded reading? To do so, you've got to get through tomorrow with strength and Friday. Be 2 more days to embed. Right now, it's very overbought. If it fails against here, we look to see how it does in between the 100-day average and the 18. The bulls are still in control, but it's an overbought condition that's had a nice pop. In the cattle market, you lost the embedded reading on the close. You can get it back tomorrow, but the odds are the pros come out today. They call it a day. There's been a nice drop. The market momentum is saying the market wants to rally back now towards the 18-day average. I don't know that it will or won't. The odds favor it unless tomorrow you get a hard break and you drop and re-embed the reading, which won't be easy. In the hog market, this could be where the pros try to pop the market. You've got momentum pointing up. You've got the swing line with lower highs, lower lows, and any move over 64, 82 and a half. This was yesterday's high, if I'm right. Yep. That could set up where you get higher lows, higher highs over the 18-day average, maybe a pop up to the 67, 65 level. So I'm looking at that hard. Is April the better play or June? The formations are very similar. So you put it together, you come up with game plans, and as you can see, we're getting so crazy here in the stock market, it's becoming a norm for 3.5% to 5% day move, a day. That's insane. But I'll tell you what I was looking at during the day were the pivot points, because the pivot points give you an idea, is the market ahead of itself or not? Example, I'm friendly soy oil, looking for the market to come up to that 18-day average. But when I went on the pivot point, the market was staying at the second resistance point. You know, had it been at the pivot point, which is the white center line, that's where I was interested in the market, or ideally the first support line. Didn't get there. What do I mean by it? Well, we put a video part series together for you. And in that series, what we do is we teach you about this. And in teaching you about it, how it all works, is we show you how it plots out on a chart, what it is. We teach you first the formula, which you don't need. Your charting service will do it for you. But you have to understand how it works, and then I teach you how to tie momentum in with it. I've been watching on different websites as an example. Ticker Talker, I don't know if any of you ever heard of it. Pretty good service. And they have professional trader chat rooms all day. They use different techniques. You can get dizzy with some of the techniques. I've been a pro at this 50 years, and I get dizzy watching it. But the concepts are very similar. You know, you use one oscillator to do one thing, another for a different part. There's artificial intelligence programs that they use. It's something to see. You might want to go take a look, and I am there in case you're interested. But I look to see, are you overbought, where you're at in relation to this part, and then you come up with an idea. Hey, my idea is working. This is a spot if I wanted to enter or exit a market. How do you get this video series? It's free. Go to www.iraepstein.com. Under free offers, you'll see it right there, or click up here. If you're watching me on YouTube, it'll take you right there. In the meantime, I'm Ira Epstein. You have a good day.